Sunday, September 28th, 2025, Maneko 64, home of alternative economics and contrarian views. Well, we've been covering the challenge to the petrodollar or to the dollar for many years. We even have a petrodollar file. Today, we're going to look at something slightly different, but it's still a challenge to dollar hegemony, to the hegemony of the New York-London axis. And that's China again. They're challenging the gold market in London and New York. And yeah, that's not just a challenge from China. Of course, it's BRICS as well. China is leading BRICS. And the reason we cover this so much is not because we love BRICS and we love China. It's just that we want to warn people of what's going on and how it will affect their financial health. And it's already affecting because the dollar and all other fiat currencies are losing value hand over fist versus gold and silver, which is very inflationary. And have you noticed how your standard of living has dropped so much in the last few years? So, but I'm going to do something different today. I'm going to give a suggestion to the United States or to America, what it could do to fight back a bit against these forces from China and BRICS. But before we do that, I want to look at this challenge in the gold market. And it's an article from Bloomberg. It was earlier this week, September 23rd. And it says, China courts foreign gold reserves to boost global clout. So China aims to become custodian of foreign sovereign gold reserves in a bid to strengthen its standing in the global bullion market, according to people familiar with the matter. Well, I think China understands that he who controls the gold controls the world. And it's akin to what Lord Rothschild supposedly said back in the 19th century: give me control of a country's money and I care not who writes the laws, right? So China is trying to do this on a world scale, and it is a challenge to America and the West. Anyway, let's continue. The People's Bank of China is using the Shanghai Gold Exchange to court central banks in friendly countries to buy bullion and store it within the country's borders, said the people, who spoke on condition of anonymity as the discussions aren't public. The effort has taken place over recent months and has attracted interest from at least one country in Southeast Asia, the people said. The move would enhance Beijing's role in the global financial system, furthering its goals of establishing a world that's less dependent on the dollar and Western centers like the U.S., the UK, and Switzerland. Countries have been snapping up gold as a hedge against mounting geopolitical risks, creating the opportunity for the PBOC to offer a haven of an asset deemed crucial as a buffer to economic shocks. The PBOC and the SGE, Shanghai Gold Exchange, didn't respond to requests for comment. Demand from central banks has been a key pillar in the precious metals' recent ascent to record highs, and the PBOC itself has been on a buying spree for 10 straight months. Markets may be speculating that China's bid to host foreign gold reserves signals a long-term push to elevate its role in the global monetary system, said Wael Makarem, financial markets strategist lead at XNES. Investors could be interpreting this as an incremental de-dollarization momentum which could support gold, he added. So before we move on to my suggestion for the United States on how to fight back against the Chinese and BRICS, I want to look at the gold market, what it's been doing in the last few months, and we're going to look at an opportunity that I think is worthwhile considering. So yeah, gold has been doing very well, of course, in 2025. We traded up from 2,600 at the beginning of the year to 3,500 by around mid-April. Then we had a consolidation for 4 months, and then we broke out of that consolidation like a symmetrical triangle, which is very bullish. And I think one of the triggers was Chairman Jay Powell, Chairman of the Fed, Jay Powell's speech at Jackson Hole. He nodded that they would start cutting rates again, and surely they did in September by 25 basis points. At the same time, we're seeing Russia, China, and other BRICS countries continue to buy gold and silver. Russia and China are also building independent gold markets in moves to bypass the US dollar. And it's something that we just spoke about, right? So these changes have helped actually push gold to historic levels, breaking its 1980 inflation-adjusted high. And Goldman Sachs even named gold its highest conviction trade ever. And they're calling even for $5,000 gold by next year. And the GDX, the world's largest gold mining ETF, is up about 107% so far in 2025, compared to just 13% for the QQQ Tech Index. So with a 79% chance of another rate cut in October and 91% in December, many analysts believe this could mark the first true gold stock bull market in 20 years. So that brings me to today's video sponsor and the opportunity I told you about. It's U.S. GoldMining Inc. I actually profiled this company back in June. It was trading around $9.20. Right now, we're just above 12. The ticker is USGO on the NASDAQ. So U.S. GoldMining owns the Whistler project in Alaska, one of the largest undeveloped gold copper projects in the region, and located near Anchorage, the state's main population center. The Whistler project mineral resource estimate comprises 294 million tons at 0.68 grams per ton gold equivalent for 6.48 million ounces gold equivalent indicated, plus 198 million tons at 0.65 grams per ton gold equivalent for 4.16 million ounces gold equivalent inferred. You should review U.S. GoldMining's latest annual report on Form 10-K and the technical report summary incorporated in it for information on the project and the mineral resource estimate. The company went public in April 2023 at $10 per share when gold was just under $2,000 an ounce. Today, gold is way above 3,500. And yes, U.S. GoldMining Inc. is trading just above 12, as I said earlier. U.S. GoldMining has a quite unique ownership structure. About 78% of the shares are still held by its parent company, and another 4.5% are owned by insiders and management. In total, more than 80% of the shares are tightly held. The political support for Alaska's resource development is another factor. On his first day in office, President Trump issued an executive order to unleash Alaska's extraordinary resource potential followed by another order calling for immediate measures to increase American mineral production, specifically including copper and gold. Alaska's governor, Mike Dunleavy, has personally visited the Whistler project, as has U.S. Senator Lisa Murkowski. Even local leaders such as Matanuska Sustina borough mayor and borough manager have shown their support. Alaska is also moving forward with plans for a road system that would directly connect Whistler to Anchorage, making the project even more accessible. And now U.S. GoldMining is at one of its most important moments in its history so far. The company has started its preliminary economic assessment called a PEA, which is an initial economic review of the project, with gold at more than $3,500 per ounce and copper at about $4.50 per pound. The timing could not be better. For anyone interested, please review U.S. GoldMining's filings, including its annual report on Form 10-K and the full technical reports, which are available through sec.gov and cedarplus.ca. These documents provide all the scientific and technical details behind the Whistler resource estimates. I'd also like to say that I'm not a financial advisor and nothing here should be considered financial advice. This content is for educational and informational purposes only. Always do your own research and consult a licensed professional before making any financial decisions. Full disclaimers, by the way, are linked in the description below. So now let's get back to looking at how the United States could fight back the challenge from China, Russia, and BRICS. So yes, how could the U.S. fight back? Well, it's through a symbolic revaluation of the Treasury's gold holdings. And there's been a lot of debate about a gold revaluation. Even the Board of Governors of the Federal Reserve System have published an article. They published an article on August 1st by someone named Colin Weiss. And the title was Official Reserve Revaluations, the International Experience. So it's something they're considering. Yes, there's been a lot of people that some of them I've interviewed calling for $20,000 price, $40,000 even. So the last time the United States Treasury or the United States revalued the gold price, the statutory gold price, was back in 1973 from $38 to $42.22. And in 1972, they had revalued as well from 35 to 38. And so it's been at $42.22 ever since. And the gold is supposedly in Fort Knox and also in other depositories like I think Denver Airport and West Point. And there hasn't been an audit, even though the Secretary of the Treasury has said that they audit it every year. But I suspect that all the gold that has flowed into the U.S. since the end of last year, when we've spoken about this quite a lot of it could be the U.S. Treasury buying or taking the gold back. And what does that mean? Well, the speculation from the analysts, and especially people in the gold bug sound money world, is that the Treasury has been leasing out that gold many times over in order to keep the price of gold under control. But now that they're thinking about revaluing, they need to show the gold. So, or they might not, the markets might take their word for it that the gold's there. But if they're like covering their leases of gold, that means it drives the price up because you have to buy back your shorts. And it could be one of the reasons why we are at all-time highs, and we could go even further up. So, and the price that I'm thinking of for the symbolic revaluation, and I'll tell you why I think why I've come up with this term symbolic in a minute, but the price that I've picked is $422.22. That's 100 times the current price. So right now, that gold is valued on the Fed's balance sheet because the Fed holds gold certificates that the Treasury sent to them when the Fed sent the Treasury all the gold that FDR confiscated back in 1933 to the Treasury, right? So that gold, the gold certificates are valued just over $11 billion. So what would happen here is that if you revalue it to 4,222.22, the gold certificates will be worth just over $1.1 trillion. And then if you subtract the 11 billion from that 1.1 trillion, you arrive at 1.09 trillion. So that's the profit that the Treasury will make from that accounting. Well, it's an accounting process, right? And the Fed will send that 1.09 trillion to the Treasury's gold revaluation account. And Barry Collinweiss, spoke about that in his article. I'm going to put a link to that article below in the description as well. So why is it symbolic? Well, I think it's because a lot of people were expecting 10, 15, 20, 30, or 40 revaluation. That I think would play right into China's and the BRICS hands, because I think China and Russia have a lot of gold. I spoke about how China has over 30,000. Yeah, that's speculation, but there's been really good research about that. Yeah, and that would really hammer the dollar, because a much higher gold price means a lot weaker dollar. So 4,222 is not really a massive devaluation of the dollar or a massive revaluation of gold. But what it would do with this extra trillion plus for the Treasury is that it would help them maybe, and nothing's certain here, it would help them maybe stabilize the longer end of the U.S. Treasury market. And why is that important? Well, because the U.S. Treasury is paying more on interest payments now than the military budget. And if the long-term yields keep rising, that's going to get worse. So what the Treasury could do here with that 1 trillion, they could take, let's say, 500 billion or 700 billion and buy back or retire a lot of the long-term debt that the Fed has on its balance sheet from the QE programs. That would make a lot of sense. That would drive down longer-term yields. It would help bring down mortgage rates or mortgage yields, which would help the housing market. It would flatten the yield curve. And what they could do with the rest, depending on the proportion they do, they could use that to start their sovereign wealth fund, which they've spoken about. And I know that I'm a proponent of free markets and small government, but right now, I guess this is a fight for survival, and the U.S. needs to do whatever it takes to try to combat China and the new multipolar world. I think the people that have been in charge of the United States prior to now the non-Trump presidents and Congresses, they've neglected a lot the real economy. And I think, with that sovereign wealth fund, they could buy or help develop infrastructure for mining, for industry. And the other reason I think it's symbolic is because it would show the world that the United States has this weapon of gold revaluation, and that it's not gonna like just cave in to BRICS and China. It's a long shot, of course, and I think there's a lot more that needs to be done because the erosion and the hollowing out of the U.S. economy has happened over decades. And something like this is not going to solve the problems overnight, but I think it's a good step forward as well. So just to let you know, there will be no live stream tonight because I have an event at my golf club and it's gonna go into the late afternoon, unfortunately. But hopefully next Sunday we'll be back for the live stream. And with that, I'm gonna wish you all a very good day. Take care. Bye.